The markets ended the week with a significant sell-off amid concerns over President Trump's incoming tariffs and inflation. The Federal Reserve's preferred inflation measure, the Core Personal Consumption Expenditures Price Index, was worse than economists expected. That figure, which excludes energy and food prices, ticked up to 2.8% in February from 12 months prior. Consumer sentiment also fell to its lowest level in nearly 3 years. Isabel Wang joins us now to break the sell down. She's a markets reporter for the financial news site MarketWatch. Isabel, what were the biggest drivers behind today's sell-off?
So yes, I would say it was a combination of sticky inflation and worries over spending, and they are getting much of the blame. So first of all, like you just mentioned, the February PCE inflation data showed inflation rose stronger than expected, which pushed it above the 2% goal of the Federal Reserve. But also in that same report, it also showed that personal spending disappointed in February as Americans have become more cautious about how much they spend on daily products, which is not a really good sign for the economy. Also, at the same time, consumer confidence fell to its lowest level in over 2 years. So it was a combination of a batch of disappointing economic and sentiment data that really drove the sell-off today.
And the president is planning on imposing a new round of tariffs on April 2nd, a day he's calling Liberation Day. What impact could this have on the stock market and the economy?
I would say the stock market, especially investors, are really laser focused on what's going to happen next week, the April 2nd tariff deadline, what is so-called Liberation Day, because investors really hope that any developments on the tariff front could really clear the policy uncertainty that has clouded the financial markets for many, many weeks. But I would say what's going to happen is still anyone's guess because of the frequent shift in tariff threats, leaving investors uncertain about what's going to happen, and more importantly, its impact on the economy. So I would say maybe it's worth noting April 2nd is not the end of all these tariff tensions, but because we're still at the very beginning of the trade tensions with our trading partners and the volatilities they're triggering in the financial markets is still at the very beginning. So investors really need to buckle up for that.
Wow. All right. Isabel Wang, thank you so much.